Next thing that went to zero, because there's plenty of zeros coming to a theater near you.
Today's video will focus on the three most important factors influencing Bitcoin. First and foremost, we have February's CPI numbers. Number two, we have the names of the people who signed his bonds, which Sam Bankman-Fried was forced to reveal. And the most important development, Kevin O'Leary appeared recently on Yahoo Finance to discuss the likely timeline for crypto regulation in the United States. Kevin, you're the one who's been getting on the phone and attending the hearings with the regulators, so tell us, how long will this take and what kind of regulation can we anticipate?
Let me give you the what's changed over the last few months on the Hill. What's different now is, and I spoke to the senators at the FTX hearing after we'd finished them, and there was a chance to just get a feel of the tone of Washington. There's a fatigue coming into their thinking. They're tired of having hearings every 6 months when the next crypto company blows up and goes to zero.
Does that mean we just get rushed to resolution now?
I think that's what's going to happen. The heavy hand, and Gensler gave you that tonality last week on staking. He made it damn clear that he doesn't like it. And he, on the Kraken deal, he said, we just shut it down. Now, if you don't hear, read the room, everybody. Just look what I did. I shut down staking. Now, that takes the value of cryptocurrencies down a lot if they can't be staked. So this is the kind of environment we're in. The industry was unable to self-regulate itself. And, let's be honest. Every human heart has greed in it. And we are given the opportunity to issue worthless tokens with no guardrails. And, the BNB and the FTT tokens, those are worthless. And of course, these exchanges are going to go to zero because at some point somebody calls the cash transaction back to USD. So right now, take for example, BNB is 64 billion of market cap. The only reason to own that token on Binance is to get a discount on trading fees. What's the intrinsic value of that token? Nothing. It doesn't give you access to the equity of the company. Now, if you go look at the wallets, there's only 2 wallets that have 97% of all of those tokens. I wonder who owns those. What happens if one of them says, I want cash? Does Binance have 34 billion USD of cash? I don't think so. So my whole point is these things will keep blowing up over and over and over again. And finally, the senators are saying on these committees, we're done. Let's put the heavy hand of regulation down. And
as such, if you are a cryptocurrency investor, allow us to explain why we disagree with Kevin and why we agree with him on some points. To begin, we can all agree that the events of the last few years have hastened the process of regulating cryptocurrencies in the United States, for better or for worse. After Sam Bankman's release, Gary Gensler, one of the regulators closest, felt humiliated. As we've seen, the regulation is black and white. There's no room for interpretation or wiggle room. We just had to shut down Kraken staking as a service. Gary Gensler sees this as a way to keep his customers safe, but in reality, it just means that crypto innovation is being sent abroad. So once again, we find ourselves in agreement. There will be a short timeline for regulations, so get ready. Number 2. Kevin O'Leary, in a very brief statement, predicted that BNB would drop to zero because the token serves no purpose beyond facilitating exchange discounts and transaction fees. We can now say that this was, at one time, somewhat true. Binance's smart chain is similar to Ethereum's in that it serves as a dApp platform, but initially it served only as an exchange. There is a developing community of decentralized applications, dApps, on the Binance smart chain. This is its value, this is its application, and it has developed greatly over the years. If Kevin says something like that in 2023, we know he's just trying to make CZ the ultimate scapegoat and spread stories from 2017. However, Kevin O'Leary has been requested to attend these proceedings. It is he who is present in the chamber with the controls. Because of these concerns, the SEC and possibly other regulatory bodies may go after Binance. In addition, Kevin O'Leary suggests we reversed FTX to trace the source of the cash flow. Let everyone know where we stand publicly.
So since we last talked, we know of a $4.2 billion pool that supposedly the Bahamians have, supposedly. We know of a $1.2 billion pool of assets, maybe cash, that FTX US has, supposedly. We know of $400 million of cash somewhere. You add that up, there's a lot of shareholders and account holders saying, okay, everybody, let's talk about where this money is. And what everybody wants right now, and putting the real pressure on John Ray, is to say, look, turn on the exchange again, gate it so no assets can leave it, so that each account holder can see what they have or had and see the transaction records, which we still don't have yet. And supposedly, again rumored, is it's all backed up on AWS at Amazon and can be turned on in a moment's notice, alleged, so to speak. So we don't know. But the litigation is piling on. There's 1,000 lawyers who are going to make a lifetime living off this thing. It'll go on for a decade or more, and, you know, let the pieces fall where they may.
Continuing with the theme of litigation, Sam Bankman-Fried has been compelled to disclose the identities of the individuals who signed his bonds. This information comes straight from the judge, and as you may recall, in addition to his parents, Bankman-Fried had 2 co-signers on his loan. Thus, his parents pledged their home and signed the bond. But who were the other 2 signatories? Both the former dean of Stanford University and the director of research at Stanford were involved. In this case, both contributed monetarily. Andres, the director of research at Stanford, and Larry Kramer, a former dean, contributed $200,000 and $500,000 respectively. Both of Sam Bankman-Fried's parents are professors at Stanford. So that's the connection. Therefore, if any of our viewers are current Stanford students, please share the buzz on campus with the rest of us in the comments section. One of the most important aspects of the Bitcoin price is, of course, the amount of interest the crypto market is macro, and we now have February's CPI data. The Consumer Price Index headline was 6.4%, which was above the predicted 6.2%. Then the core CPI, excluding food and energy, came in at 5.6%, which was slightly higher than the forecasted 5.5%. The meaning of this is unclear. Basically, it tells us that inflation is a lot more tenacious than we had anticipated. Our rate of decline is slower than anticipated. We think it's important to point out that we're definitely on the decline. Here is the current situation. Inflation on food and energy from the headline and core measures looks like this. We are currently a tick lower than this time last month and significantly lower than the mid-year highs in the Midwest, so the downward trend is clear. Goal is to get to 2 now. The numbers remain unchanged at 6.4% and 5.6% respectively. So despite the Fed's 8 consecutive interest rate hikes over the last 8 meetings, inflation is falling again, though it is much stickier than we were anticipating. We have a long way to go before we reach our 2% by the end of the year target. Compared to what Jerome Powell has been saying, this tells us that we are very unlikely to achieve a rate of 2%. Maybe 3% or 4% by the end of the year, and 2% into next year. The markets are now anticipating that we do get more than just another 25 basis points rate hike, rather than hold because of this sticky inflation. The financial markets currently anticipate 3 additional rate hikes of 25 basis points by June, resulting in a terminal rate of 5.5%, followed by a hold at that level until December, when the Fed is expected to cut by 25 basis points. Therefore, at the last meeting, they predicted there would be only 1 more, but based on this information, the market now anticipates 3 more, followed by a hold for the remainder of the year. Indeed, this is a never-ending tale. 1 more CPI report will be released before the next Fed meeting. When we have new information, we will upload a video to our channel to keep you abreast of the situation.